the Sprive app last week on the back of Dragon's Den. We were the most downloaded finance app in the UK, top 6 in the entire country. So we're growing very, very rapidly, and more and more homeowners are starting to see the benefit. If you can chip away at the mortgage, it's a good thing to do. Sadly, it's something like 3 million people in the UK will have a mortgage past the age of retirement. It can be a little bit intimidating. You've got the 5 dragons, they've got the cameras and the lights, and then they hit you with hard questions. And because I'm a tech company, it's not like you can just build the company with just £20,000. Financial services trust is so important. And things like connecting your current account and using an app that you never heard of to manage your mortgage, for a lot of people it requires a lot of trust. So going on the BBC, having dragons who really kind of look into your business in quite a lot of detail, and at the end of it are very comfortable putting their kind of their name against a brand like mine adds a lot of value, and that can't be underestimated.
Hello everybody, welcome to the Mouthy Money podcast. Today we're going to be looking at a really interesting topic, especially if you've got a mortgage, and that is the question of whether you should be paying your mortgage off early or not. Now, we are going to hear from really interesting guest to discuss this topic. His name is Jinesh. He is the founder and CEO of a mortgage app for paying down your mortgage faster called Sprive. He has also just appeared on the BBC's Dragon's Den, which we will also be discussing a bit later in the podcast. I'm also joined, as ever, by my good co-host, Chris Chu. Chris, good morning. How are you doing?
I'm very well, thanks, Ed. How are you?
Yes, very good. I'm very interested to get into this topic because this is something I've thought about personally a lot as well, whether I have a mortgage, whether I should be trying to pay that off a little bit earlier or trying to pay that down a little bit faster. We're going to look at some of the reasons why you might want to do that. Jinesh is going to give us some insights on it. He's also going to tell us about the Sprive app and how that can help do the job of paying down the mortgage a bit faster. And then we're going to come on later on in the episode to his appearance on Dragon's Den, because we've both got lots of questions, I think, about getting a bit of insight into how that whole thing goes. Chris, tell me, have you ever thought about paying off your mortgage early?
On a daily basis, Ed, I think about paying off my mortgage early. I had a conversation with somebody recently and we were talking about the Euro Millions. And we were saying, look, I don't need whatever the massive, jackpot was at that time, 150 million quid to be sort of happy. So we then got into a discussion. This was kind of a barstool discussion. What is the minimum amount of money that you could get overnight that would fundamentally change your life? And we both agreed, with slightly differing balances, that paying off our mortgage would be life-changing. So since that conversation, I've been thinking about ways that I could raise the not insignificant amount of sum of money to pay off my mortgage. And I'm also painfully aware of the derivation of the term mortgage is from the French, which means death contract. It's become a bit of a mini obsession with me, which is why I'm so excited to speak to Jinesh, because I just want to chip away at it now and try and get it paid off as quickly as possible, because I think it will bring with it a level of freedom for me that I'm sure I'll feel with some other anxiety, because that's what I do around money. But I do think it would be life-changing if I could get it paid off sooner rather than later. So yeah, I think about it more regularly than I ever used to after that friend planted that double-edged sword or double-edged seed in my head.
Yeah. I mean, I think about it a lot, but then I always have that message in that voice in the back of my head. And I think Jinesh might have a bit of a counter to that in a second when we come to him. But that kind of message in the back of my head as well, you can, if you didn't use that money to pay it off early, you could invest it instead and get a better return than the interest you're paying off. But it's not always that clear cut, especially now that interest rates are a bit higher than they were in the 2010s. So I think there's a bit more complexity to it there. But I mean, I agree with you in that sense. I would like to chip away more at mine. I think I have, and actually this is why I found Sprive initially quite interesting, because if you were to ask me, okay, Ed, go and pay off a bit of your mortgage early, I'm not quite sure I would know how to do that in a very straightforward way. I would have to kind of do a bit of research and probably contact my mortgage provider, who I'm not even sure if I've got an online account with them. It starts throwing up a lot of practical problems.
So I have done that, Ed. I have done that. I made a slight overpayment when I paid fees on my last sort of renewal, and I was like, okay, I don't really want the fees tacked onto the end. So the advice that I got from a mortgage broker was just pay off the principal basically, and you'll have the same effect. So I paid off the principal with a little bit on top, a little bit of the principal. And the other thing you're interesting about that kind of moving picture, interest rates are hopefully going to go down this year when I renew my mortgage. And although it's been painful, we've proven we can handle the pain of the current level. And now I'm very much of the mind, well, actually, do I keep the repayments elevated slightly and just stay in that sort of cadence of the repayments that we've got used to and chip away at it that way? Which there's going to be a debate around that, because like you say, it's a constantly moving picture. Interest rates are doing one thing, investment returns are doing another thing, markets are doing X and Y. They all have to be kept separately. This is where I think Jinesh's your app comes in, kind of is more interesting, because it's just, well, it's almost making it a bit more passive, that process, making it part of your kind of weekly routine, which I think really appeals to me. And if I could do that double-edged thing of consciously paying it off and subconsciously paying it off, then there might be some real kind of impact that I could measure there.
So Jinesh, let's bring you in now. In terms of should I pay my mortgage down early? What are the kind of fundamentals of that question? Is it I imagine obviously you think it is a good idea, but what are the facts behind that?
Yeah, I think it depends on the individual to individual. My own personal mortgage journey, I remember when we got the mortgage offer document, this was about 13 years ago when interest rates were very low. We saw it said that for every pound we borrow, we'd pay 50p in interest. And so we were due to be paying about £150,000 in interest over the lifetime of the loan. And that was a lot of money. I just didn't feel that was right. And so we went through a journey of aggressively paying off our mortgage. And I have a financial services background. I was like Goldman Sachs for 14 years. I understand investing. For me, it was all about kind of taking control of my life. So Chris, a little bit kind of what you alluded to. I had a good, fortunate job. So I was able to aggressively pay it off. And it was the only way that my wife would ever give me permission to essentially quit my corporate job and start Sprive. I think if I still had a mortgage, she would have been like, pipe down, carry on the corporate job. And obviously my situation is a bit extreme because I was able to do it quite aggressively. You do think a bit differently when you don't have a mortgage. You can take bigger risks. And obviously if Sprive does well, then that can be completely life-changing for me and my family. I think for most people, I think it's about a balance. If you can chip away at the mortgage, it's a good thing to do. Sadly, it's something like 3 million people in the UK will have a mortgage past the age of retirement. So imagine being in your late 60s or even your 70s and still having a mortgage. And you never know what could happen late in life. You could lose your job, you could fall sick. I get worried about things like AI and, what does job security look like over the next kind of 25 years for a lot of white collar workers. And so being able to chip away just gives you a little bit more control. And with Sprive, we'll obviously go into it. We can help people do that passively without kind of changing your lifestyle, so that if you want to invest, you can. The other flip thing I'd say is that you need to be comfortable with the investing. A lot of people kind of really easily say that, oh yeah, with investing, you can get like a 7% return at, every constantly across a 25 to 30, 40-year period. Most people potentially can't do that. And so if you're not comfortable investing, I'm very confident with investing, that putting money in your mortgage, especially when rates are like 4 or 5% now, when you pay down debt, you get effectively a tax-free return. It could be quite a nice thing for a lot of people.
So there's a really interesting point there, isn't there, about and the longevity issue, I think, feeds into this, and it's something that I only learned reasonably recently because I'm not really a mortgage expert per se. And that is that a lot of the interest costs of a mortgage are front loaded at the kind of the beginning of the mortgage. So actually, if you want to go on a journey of overpaying and paying down early, it actually pays to do it as soon as you can once you've actually taken that first mortgage out. Is that right? Is that fair to say?
Yeah, that's right. So lend is front load interest. So it's called amortization. But essentially, a lot of people are actually surprised when they initially take out their mortgage and they're paying their monthly payments. 70% is goes towards interest. Only 30% goes to actually kind of paying back the money that you initially borrowed. So a lot of the time you might be 2-3 years into your mortgage and still see the statements come through and be like, why do I owe so much money in capital when you've been making these monthly payments? And I remember my dad was a good example. So he paid off his mortgage in his kind of late 50s. And he was a saver. He was a notorious saver. So he would save a lot of money. And then towards the end, when he felt like he was getting close to retirement, he started whacking chunks of money towards the mortgage. And if he'd done that constantly and just drip fed that money, he would have saved a lot more interest. Unfortunately, he did it towards the end when he'd paid most of the interest. So his savings were a lot lower. Whereas when I did my mortgage, because I did it so early in the term, I was able to save £70,000 in interest, which is obviously a big chunk of money.
Yeah. So let's look at Sprive now. I think the argument there that paying down your mortgage, especially if it's something that hangs over your head, you feel like having that debt is difficult, or you just want to get clear of it. And that's something that I think we can all feel. So tell us about Sprive. Just walk us through what it is, how it works, and what people can use it to do?
Yeah, sure. So the way I describe it, it's a free app and it's focused for homeowners who want to pay off their mortgages faster and save interest, but without impacting their current lifestyle. And we help customers in three core ways. So the first kind of reason why you'd come to the app is this concept that we use called shop away your mortgage. So if you think about the average person, they tend to spend a lot of what they earn, live in a cost of living crisis. And so imagine every time you shop, you turn that into a mortgage overpayment. Whether it's your grocery shopping, whether it's your online shopping, your cup of coffee, your takeaway, next time you buy car insurance, home insurance, if you do everything through the Sprive app, on the back of each transaction, you get free money towards your mortgage. And with one tap, it goes straight to your mortgage lender. And so we support 14 of the largest lenders in the UK. So all the kind of the main kind of high street banks we effectively support. And I'll give you an example. Like we work at 7 national supermarkets. So if you take the average family, it's quite common that you'll spend £100 to £200 on a weekly shop. And you say you earn on a £100 shop, so £2.50 in terms of cashback by shopping through the Sprive app. For a typical average mortgage, you'll save 3 times as much in interest when you send that cash back towards your mortgage. So on a single £100 shop, you could save anywhere between £7 to £10. You do that every week, and most people will shop weekly because you obviously need to eat to live. That really starts to add up, and that's just one change in habit. And then we have like a second feature, which is spare cash. So this is like an auto saving feature where you can link your current account, and then we set aside spare cash based on your spending. So you might say as a homeowner, I can afford anywhere between £1 and £25 a month. Some might be more aggressive if they've got more discretionary income and say, I can afford anywhere between, say, £250 to £750 a month. And then we work within those limits and we'll look at your rate of spending. So say, for example, like it was Christmas and you spent a lot of money on presents and things like Christmas dinner, then we're probably going to set aside a lot less spare cash compared to like weeks and months where we're saving and spending less. And again, with one tap, that money can go to your lender. And the great thing about those two features is you can visually see how much interest you're on track to save. So you might initially be on track to save 1 month off your mortgage, and then 3 months, and then 6 months, and 9 months. We have customers, like there was a social media post that I saw a few days of a Sprive customer using our app, and they were on track to save £84,000 in interest and not 14 years off their mortgage. I mean, the difference between being mortgage free at like 70 versus 60 or 60 versus 50 is absolutely life changing. The final thing was the third feature that we have, which is we scan the market every day for better mortgage deals. If we can find you a better mortgage deal, we'll help you essentially get that deal. But even when you refinance, it's all focused around how can we help you pay off the mortgage faster? Because as Chris mentioned, when you're refinancing, it's again another great opportunity to maybe put a few chunks of cash, if you have it, towards your mortgage. Maybe it'll get you down to a lower loan to value threshold, which means that you can get kind of cheaper deals. And we do smart things where if interest rates suddenly start to go down, we can even work out if it makes sense for you to exit your deal early, pay an early repayment charge, and refinance over to a cheaper deal. So we do some very clever stuff in that space as well.
Now I only confess I'm not, cashback is a thing that's been it's ever present in personal finance, and working inside it, I understand why cashback exists. And effectively, look, it's a system for retailers effectively to essentially just sponge up a bit of extra custom for a little bit of a discount, so people feel like they're getting something a little bit back on a purchase they make. I've never really been a cashback guy. Chris, are you a big cashback guy? Do you ever use cashback and that sort of thing?
I haven't actually, and it's pure laziness, if I'm being brutally honest. It's just like when I did once try and claim a free pizza by using a voucher, and it was such a faff. I think it put me off forever. I just got there, and then the internet didn't work in the branch of Sainsbury's that I was in, and I ended up timing out and having to pay full price. So I think that's kind of biased me against it. But I do like this idea of creating this virtuous circle that just at every angle I'm chipping away at this mountain of money. So I'll have a look at it. I think a practical question that I have, Jinesh, is just around, I have shopping delivered. Does this work on a kind of online basis as well? It's not, do you have to physically be in store to scan? How does it work with that regard?
Yeah, so it really depends on the supermarket. So some supermarkets are online and in store, some are in store only, some are online only. So it really depends. What we tend to find is because a mortgage is such a pain point that people will actually even be willing to switch supermarkets if their supermarket's not there or their preferred option's not theirs.
I was literally just thinking that, Jinesh. I was like, mine better be there, otherwise there's plenty others on the high street. So there we go.
Exactly.
Yeah.
My personal trainer, He used to use Ocado, and now he shops at Asda because he wants to, save chunks of money on their mortgage. In terms of like cashback, I think cashback in itself, like even me personally, I would think that kind of small amounts of money doesn't really mean anything. But when you put it towards the mortgage, first of all, the application effect is so high because you're essentially putting it into your mortgage. So you're essentially investing that cash back in a very thoughtful manner. That becomes much more motivating because you're amplifying the benefits. And then it's also it's about habit creation. So when you try it the first time and the second time, it might be a bit awkward. But once you nail it, you kind of work out a system that works best for you, and then you fit it into your life. And you can start off with one brand, get that nailed. So maybe you're grocery shopping because that's like a real staple thing that you do. And then it might be, okay, what's the next thing? It's my Amazon shop. So you start doing that because you spend a lot of money at Amazon. And then you go, okay, now what do I do next? My car insurance, my home insurance. And then once you start building those blocks, before you know it, you see the counter within the Sprive app and you see the numbers going up and it feels good. And then it becomes more and more part of your habit. And then look, if you really like to be more passive, then you can always put spare cash, but there's nothing better than free money.
I think that's kind of what I was coming to on the cashback point. Is it functions in a similar way to people who might be familiar with that kind of cashback process. And there are people who are super committed to that. But that's what I find so compelling is actually I'm doing something practical with the savings that I'm making or the extra cash that I'm generating through things that I'm already doing anyway and spending money on. I think it's really, really powerful there. And actually, I watched The Dragon's Den, which we're going to come on to in a second. And then, funny enough, had a conversation with my wife about it, and her friend had come over, and her friend's got a very young son. They've got a mortgage in the first couple of years of becoming first-time buyers, and we were just talking about it, and her eyes kind of lit up because this is something that's a normal part of her life. She has to go do shopping. She has to do this and that with her daily routine and spending money on all sorts of things. And actually, let's be real here, like spending money a lot of the time, we talked about cost of living. Spending money these days feels painful, doesn't it? When you feel like you're on that limit every month and even you're not able to save, even if you've got that mortgage sorted. I feel that all the time. So if you get a bit more out of that spending, well, that feels good, doesn't it? There's a powerful emotional incentive there, isn't there?
Yeah, 100%. It's ultimately when people take a mortgage, they take it because they want a family home, and the cost of debt is what comes with it, and the amount of interest you pay is eye-watering for a lot of homeowners. So I think a lot of homeowners, when I've spoken to them before they use Sprive, they just feel like it's completely something out of their control. It's just something you got to live with, and it's a stress point. But with Sprive, we're giving people control, which is fantastic. And we've created a real community. In the last 30 days, we've had 130,000 homeowners use the Sprive app. Last week, on the back of Dragon's Den, we were the most downloaded finance app in the UK, top 6 in the entire country. So we're growing very, very rapidly, and more and more homeowners are starting to see the benefit. And we do some really cool things, like we do a prize draw. So for existing customers, every week they can win £1,000 towards their mortgage. For new customers, we do a prize draw at the moment we're running where we pay the next monthly mortgage payment. So a lucky winner yesterday got their next month's mortgage paid on Sprive, which is not a bad thing. You download an app for free, you start shopping away your mortgage, and suddenly you've got your next month's mortgage paid. So we're really trying to create that community of homeowners all on that mission to be mortgage free.
So let's come to the Dragon's Den now, because I think this is a kind of slightly unusual additional piece of interest that we get lots of really interesting people on, but you've done something that is, I'd say, unique in the history of guests on the Mouthy Money podcast. Now, we're probably going to talk through some spoilers. So if anybody's got to this point and they haven't watched the Dragon's Den episode yet, maybe go and watch it and check it out and see what you think first and come back to us. Just remember to come back to us, please. So Jinesh, look, what was it like going on Dragon's Den and facing these kind of 5 well-known and extremely successful investors?
Yeah, I mean, when I look back on it, the experience was really fun. It was obviously at the time it can be a little bit intimidating. You've got the 5 dragons, they've got the cameras and the lights, and then they hit you with hard questions. And because I'm a tech company, it's not like you can just build the company with just £20,000. You need some real investment. And so like when you initially start a technology company, you'll make losses. So when you go through the numbers like you do if you've watched the show, you're like, year 1 made a £500,000 loss, and straight away they then start to really go for you. But I was in the studio for about, in terms of the actual kind of questions with the dragons for about an hour and a half. So as we kind of went into more and more detail, you could suddenly start to see that they were really excited about the proposition. And yeah, in the end, obviously, it turned out well for me. So I definitely enjoyed the experience.
I think that's quite an interesting. There's an interesting because I know Chris. I know you have your thoughts on Dragon's Den. You're not a regular watcher. I watch it with Ellen, my wife, and we enjoy talking some of the ideas. But you see a lot of very similar companies come. A lot of you get like a lot of skincare brands, beauty brands, food and clothing, and you see a lot of stuff is quite similar. The one thing you don't see often, actually, you do see some tech sort of stuff. But you don't see a lot of finance and obviously fintech and more specific financial technology firms like Sprive. Do you think is there a reason for that? Is it just maybe the market for kind of fintech possibly is better served by investment with things like the City of London and that sort of stuff?
I think so. I think fintech, especially because it carries a lot of cost of capital. I think a lot of founders will go to institutional investors, and I also think that financial services is quite niche in that it can be like some of the sectors that people are building in. They're hard to understand. And they're not as interesting when it comes to television. Well, I think my proposition is quite simple to understand. Like 10 million people visited like a cashback website last Christmas. People understand their mortgage. People understand being debt free, mortgage free. So I think that was one of the reasons why we got selected. Is that they just felt like it'd be something that's quite interesting.
Yeah, Gary Neville, I think, said that, didn't he, when he was speaking to you? He was like, actually, he doesn't really understand it. So for that reason, was that reason he decided he was out? I think
he called it a dark hours, which was I wasn't sure what he exactly meant by that. But I think obviously he's very privileged, being a professional footballer. I don't think he to be looking for cashback deals.
Yeah, so he's not at the Asda, is he? Scanning at the checkout. Let's face it.
I'm sure he has one doing his grocery shop for him. So I think for him, it just couldn't emotionally connect to it. And for me, I made it clear because I'd raised capital before going into the den. So for me, it wasn't about the cash per se. It was more around the gravitas and the trust that comes with the dragons and the experience having the business acumen. And so when I said that to him, he was I think a little bit unsure around how he could help me, given his background, and so he kind of bowed out. But he did make a nice comment at the end, saying he felt like him and Stephen Barlow who was the other dragon who didn't invest, and that they were a little bit naive. Because once Peter Jones started asking me questions, who knows fintech very well, it became super apparent after they kind of bowed out that okay, this is going to be a very interesting company.
Yeah, I think that's quite for me is always, again, because we kind of work, this is a bit inside baseball, I'm sorry, but working inside media and inside financial services and that sort of thing, the question that always sits in the back of my mind about something like Dragon's Den is some of these companies obviously really do need someone to invest. They don't have networks that they can tap into to find investors. They might be inexperienced and need help with certain areas of it. Obviously, you've got a bit more experience coming from a financial services background and this sort of thing. So sometimes the tension for me is like, actually, Dragon's Den, is it more just an opportunity for that business to just get in front of a lot of people on the BBC? Does that play into it as well? Because it is an opportunity to just speak in a public forum on a popular TV program to a big audience.
Yeah, 100%. I think it's very difficult as a startup to really get yourself out there. You can raise a lot of money and spend a lot of money on like Facebook ads and ads on TikTok and things like that, but you need it's hard to cut through. You think about how many brands are advertising on social media. And so how do you find platforms where you can get in front of people and spend a good 5-10 minutes talking about your business? It's very, very rare. So getting that kind of platform is fantastic. And obviously the proof in the pudding is that just look at the number of people that downloaded the app just over the last 48 hours has been absolutely incredible. But at the same time, the dragons, with financial services, trust is so important. And things like connecting your current account and using an app that you never heard of to manage your mortgage, for a lot of people it requires a lot of trust. So going on the BBC, having dragons who really kind of look into your business in quite a lot of detail, and at the end of it are very comfortable putting their kind of their name against a brand like mine adds a lot of value, and that can't be underestimated for sure.
Yeah, that interrogation piece is crucial, I think. It's not just you get up and pitch your brand. It's you get up, pitch your brand, let people look in at what's going on behind the scenes to a degree, and then they ask some questions which you field. And then at the end of it, 3 of the 5, which is to your return on credit, Jinesh, went, yeah, that's for me. I'd like to get involved. And they even seemed to strike quite an amicable deal on percentages, which was again, quite an interesting thing to watch. As Ed pointed out, I'm not a regular watcher, so I don't know how common that is. But I was, I thought, wow, he's played a blinder here. At the end of it, in terms of getting them to invest. But I was obviously, look, comms is my business, so I was very mindful of this trust piece. It's a big thing that I deal with day to day. But actually, yeah, that interrogation piece allows that to happen because people think, well, if it's all right for them, and if they've looked under the hood and think it's okay, then it's all right for me. And those numbers that you've talked about that you've seen since the show is aired is proof of that. So yeah, it's great. Yeah, and it's maybe a slightly complicated mechanism with regards to the cashback thing because I don't do it that often, so it feels that way to me, but I'm sure it'll be simple when I start. But it's a simple message, like you said, which is, wouldn't you like to be free of your mortgage? Hell yeah, can you help, sort of thing. So I think it's a great platform. It's a great message that you got out there, and it's something that we've been banging away on in different parts of media as well. So it's great to see the conversations being had.
Yeah, and I think Chris, like in terms of getting started, what I would suggest is just do a small shop, like a buy a bag of crisps, something really simple, and just do that, and then go, okay, that worked, and then you get a little bit confident with it, and then you can do like a big shop. Sometimes with these things, it's just nice to just give something a try, get confident with it, and then go and then do bigger purchases. But yeah, we have obviously a lot of homeowners now using it. Our customer scores are like 4.8. Very, very strong. Word of mouth is that the biggest way we grow. Like more than half of our customers that we get are from friends and family telling the other friends and family that you should try Sprive. And so, we're growing quite rapidly. So hopefully we'll become more and more mainstream. I think that sometimes the friction that sometimes you might experience with cashback is just limited by the brand's technology. But you can't go and get like big brands to change the way their tech works. You've got to kind of lean towards it. So ultimately, if someone wants something that is super easy and you want to save like tens of thousands of pounds in interest, it's not always possible. Especially, there's got to be some effort that has to be put in. But hopefully, the goal and the app and it really motivates you or motivates people to kind of that goal. And if they can save even a couple of years off their mortgage, I mean, that couple of years will definitely make a difference for sure.
So, I mean, I think I'm gonna give it a go now. I'm gonna try and convince my wife to do it as well. So we might have to get you on again in 12 months, Jinesh, to have another catch up. And I can tell you how much interest you've saved me on my mortgage, and we can probably toast to that, I would imagine.
Sounds good. We're building actually some really cool products as well. So if we do that, there'll be some really like new products that don't exist in the market today. And so yeah, happy to come back for sure.
So that was going to be my kind of closing question for you. Was you've hit some of those numbers that you talked about in Dragon's Den in terms of getting those clients to getting those customers, sorry, I should say, to kind of improve that business bottom line. Where do you go next with the Dragons? What's in store? Is it more ideas to add to it? And what do you think?
Yeah, and which Dragons could we? Some listeners may not have seen it. Which Dragons did you eventually leap into business with, Jinesh?
So we got 3 Dragons. We got Tuka Solomon, and we got Peter Jones and Deborah Meaden. So the 3 Dragons that have been on the show for the longest. Yeah, kind of the core Dragons, I'd call them. So yeah, I was very happy because people have seen them on their screens for so long. And in terms of like what's next, 2026 is an exciting year. We're creating a shopping AI assistant. So the one challenge that I've had with cashback, and one of the reasons why I historically, when I was in my corporate job, never used cashback is I find it quite overwhelming. Sometimes I go to some of these websites and they have like 2,500 brands or even more. And I just don't have the time to go and see if that brand's on there. I just want to like shop and get it done. And when I look at like my behavior now, I now start to use AI a lot more. And I'm doing things like what is the best, best phone to get in 2026. And so we want to create like an AI assistant where it's effectively, instead of going to Google or going to a specific website, you search within this domain, within the app. And so if I want to buy like my son an iPad, I just type in iPad and it shows me the best deals in the market, shows me how much I can save towards the mortgage, and then I can transact within the app itself. And so I think that would be really, really nice. So it's more the universe that you shop within the 2,500 brands. Every single shopping transaction can save you money towards your mortgage, and you're not thinking about is this brand on there? You're basically finding the best deals in the market for what you're looking for. But that in that universe, everything you shop will save you money on your mortgage. And so I think that would be really cool. And so we're building that at the moment. I really want to create a savings product where the interest that you put on your savings goes towards overpaying your mortgage. Nothing like that exists, but in my head, a little bit like the cashback, where we supercharge the cashback because it goes towards your mortgage. Imagine you can get double savings. So imagine you save £500 this month and you earn 3% interest on that, and then that interest goes towards your 4% or 5% mortgage. You save even more than the 3%. It becomes supercharged. And so that would be super exciting. And we're trying to talk to some tax experts to see if we can even make that tax free, because obviously the ISO allowance in the UK is reduced. So we're trying to do some really cool, different things that have never been done before. There's other things on our roadmap, but those are like two exciting things. And at the moment, we've got these prize draws, which is every week we'll pay someone's next month's mortgage. But if we do really well, I like to be able to reward Sprive customers, like at least one Sprive customer, to pay off the entire mortgage as a thank you for using Sprive. And hopefully that will get the word of mouth going, because I promise you there'll be better odds than winning the lottery if you're, because obviously a lot less people use Sprive compared to the how many people are in the national lottery, for sure.
All right, that is duly noted. Very, very interesting. I think that about wraps us up. Really, really interesting idea. Obviously, if you've been following along today on our chat about paying down your mortgage early, let us know if you're doing it yourself, if there are any strategies that you use to try to pay off your mortgage early, and whether you're going to give Sprive a try, because I certainly am. I think we might be close to convincing Chris to do it as well. But with that, Jinesh, really, thank you for your time to talk to us about your experiences and getting Sprive up and running, and etc. Really, really interesting.
No, thanks for having me, guys.
And thank you, Chris, as ever. And thank you, everybody, for tuning in. We shall see you again all very soon. So with that, I shall say goodbye. Thank you, everybody, and goodbye.